We have a great panel here with very experienced leaders to discuss this topic that most of you guys are familiar with. I can introduce briefly, but I would ask the panelists then to provide more details. We have Alia from HSBC, Chor from Moody Analytics, and Nicola Poole from Citi. Ladies first.
Thank you. Well, it's lovely to be here. My name's Alia Cooper. I'm the head of Client Lifecycle Management Strategy for our wholesale business at HSBC.
Hello, I'm Nicola Poole. I'm the Global Head of Client Onboarding for KYC at Citi.
Morning, everyone. I'm Chor from Moody's. So I've got a slightly longer intro, if I may. So I bring with me more than 17 years of experience across the banking and financial sector. So before Moody's, I was in the banking space. So my focus within Moody's is to bring the expertise that I've gathered, the hands-on experience within the KYC, client lifecycle management, and compliance transformation program to help to improve the effectiveness, efficiency within the compliance program. And hopefully I could share and learn something today.
Great, thank you for the introductions. And just as a reminder, if you have any questions, please use the Umbrella app. There's a Q&A function, and we will make sure that we answer all of them. Now, the title is clear, and we have a very interesting panel here because we have representatives from banks as well as providers, and that's also why we're going to leverage this to share and exchange knowledge. I would like to start with a question, what the challenges are that are being faced in financial institutions or in other companies. And maybe, Chor, you want to start and name your main biggest challenges that you know.
Sure. Thank you, Patrick. So I'm not going to name the challenges because from Moody's perspective, I would like to share the research that we did very, very recent, late last year. So I'll read out some of the stats. So late last year, Moody's conducted a independent research with a consultancy by interviewing 60 senior decision makers across 58 firms and 9 countries. We're focusing on 3 segments. So the traditional finance, fintech, and then finally it's corporate and professional services. So these interviewees are very senior, the heads of, as well as we do have key decision makers amongst the firms as well. So this is purely from a helicopter view. What do they see from a management perspective? And what we found is on the traditional finance, this will apply to both tier 1 and non-tier 1, the usual suspects, outdated system that they need to deal with, and then staffing challenge. And more importantly, most of them are working towards to improve the competitiveness amongst their own firms as well as amongst their peers. On the fintech side, although what we found is although they're digitally savvy, but they're hindered by the regulations constraints when they expand product or when they expand jurisdictions. Again, on the people side, they struggle to attract talent. On the corporate and professional services, on the other hand, is the comments are very strong economic headwinds. So they have massive challenges across the international diverse supply chain, which makes the digitalizations fairly challenging. All 3 segments, they come with a common thing, which is data access, and the data quality.
Yeah, and based on my experience at Allianz, I can confer it. But Alia, how does it look like at HSBC?
Well, I don't know if we were one of the organisations that you spoke to, but that does sound familiar to some extent in terms of the challenges. I think the main one I'd call out is trying to move at pace within a brownfield technology infrastructure. That's always, I think, our biggest challenge. We've got a lot of legacy systems. We've got a lot of complexity being a globally distributed organisation with global standards and local regulatory requirements to meet. So I think sort of meeting those challenges with the existing technology architecture at pace is probably our main challenge.
I'd have to agree, actually. I think not just, in my current position here at Citi, but also across the industry, I think we see data and legacy platforms as being probably the big showstopper in moving forward. We are also, obviously hearing a lot around the new economy, technology solutions, and how they drive change in, time to market with regards to onboarding. But I think we're looking at very different, client types when we look at that, and we're sometimes held to higher standards than we can achieve in the global investment banking environment with our policy requirements for corporate entities, which are our biggest client base.
And where do you see the main differences? And also for you the question, right? Because you have different lines of business, different businesses itself. Where do you see the main differences, and how do you tackle them?
The main differences in terms of the challenges?
The challenges, yeah.
Well, so I'm part of our wholesale business, and so the big challenge we've got is dealing with our customer base, which ranges from sole traders up to large multinational organisations. So inevitably one solution is not going to be appropriate for all of those different client types. So for us, the challenge is, how do we build something that is suitable for a sole trader, but is also going to be flexible to accommodate a global business that wants to deal with everything through its headquarters, or another global business that wants to deal with everything via its distributed network of subsidiaries. So there's a whole wealth of complexity in amongst all of that as well, but I think that's probably the business challenge.
Yeah, I think it's also putting client experience. We're here to talk about client experience, and I think our compliance and technology solutions in-house or those that we've bought off the shelf were compliance tools. We're there to protect the bank versus have a time to market that is going to meet client demand or business demand. And I think the client service, the differentiated service, being able to deliver for those global corporates that require short time to market, hand-holding, white glove experience, I think is the challenge that we face on a day-to-day basis. It's meeting the two, the protect the bank and the commercial benefits of doing business.
Very interesting points, and let's go, into 10 years from now, because the challenges right now, of course, you mentioned legacy, and from time to time, in 10 years from now, today is also going to be legacy. Now, in terms of your AML and financial crime strategy, where do you see the plan in 10 years from now to be, future-proof? Alia?
Well, I think for me, I'm probably a bit of a dinosaur in this industry, and I was here 10 years ago, and I thought I'd be in a different place 10 years ago. I have aspirations for us to be much more digital, much more data-led, using generative AI to make decisions around how we operate and how we manage our compliance risk and our AML risks. So for me, it's that digitisation, it's using data more effectively, it's having single view of client, which actually I think a lot of us are close to being at now or working towards. However, I feel that will be what really moves the bar on effective compliance and being able to manage risk.
Yeah, and just to build on what you said earlier about the kind of client experience, the aim really is to try and replicate what many of us experience as individuals. We, in terms of any technology that we interact with, we want it to be seamless, we want it to be quick, we want it to do what we want it to do when we want to do it, not be told what to do by someone else's timeline. So thinking about how we can incorporate what people are experiencing as individuals into their experience of dealing with us as a corporate and their experience of working for some corporate entity, that is going to be at the heart of it. So thinking less about what do we need and how do we build what we need into a customer journey that makes sense to them. And I heard a lovely phrase somewhere else, I can't take credit for it, micro due diligence, which I think is really Yeah, it's a great idea, right? So rather than sort of landing some 300-page questionnaire on somebody every so often, the future is going to be we understand what we need from you when we need it, whether that's through some piece of data expiring that we have to keep up to date from a regulatory perspective, or some external event that means we need to contact you. We don't ask you all of those questions. We only ask you the ones that we need to ask you. And we try and time that in such a way that it's when you've got some kind of interaction with us already, or we can channel it to you in a way that fits in with your business process and your business practices. So I think that, to me, is the future. And I think the technology that we're seeing now and the pace of that technology makes it feel more achievable to me than it ever has done in the past.
I think also you have to think about what our regulators impose on us, right? And the interpretation bank to bank of those regulations. We are all creating our own policy standards. We're all implementing them in different jurisdictions in different ways. So the harmonisation and the standardisation across our regulators, I hope, whether that happens, I'd probably be wishful thinking in 10 years that we would have more consistency. But actually, if we become more digital, it's a natural progression in regulation for it to move in that way, because there'd be no question around the requirements you have. If it's a digitised requirement that we would all have access to globally. So I think the consistency on policy and standards globally are really where in 10 years' time I'd like to think that, combined with our client experience drivers, will see us in a different place.
Chor, you have the outside view.
Yeah, no. I agree with both Alia and Nicola mentioned about everything that's touched on. So having transitioned from a banking side now to I'll call it the vendor side, I see things exactly the same, but I'll also highlight there was a trend of evolve in how I see it. Often back in the days when I was running the team, I focus a lot on building a foundational architecture. So if you go down to the foundation level, if you actually tackle the element that built a foundation, you can actually adopt and scale better. So take two examples that I'm going to highlight is the regulation side. First is the EU regulation, the famous AML that most of us would get involved and trying to adhere to it. The regulations I'll highlight 2 points. One is they can empower the regulators to enforce fines. Second thing is there was even a proposal of reducing the UBO threshold ownership. So, for example, the low and medium risk reducing from the famous 25% down to 15%. And then the high risk one was from 10 to 5%, so plus one vote. So obviously this is the EU aspect to adhere to that. Now on the UK side, there was FCA recently published a 3-year business plan, and it focused a lot on, let's say, testing the framework to make sure that the system have robust systems to test your tools, your system, your framework against sanctions and AML. So FCA highlighted a few points about using synthetic data to test your system. So to an extent, is you need to have the architecture, both data and technology within the firms itself to be able to scale to do this sort of testing. And this is in 10 years' time. This is very short. This is in 3 years' time. So have a foundational that allow you to adapt to these changes, I think is fairly key.
Yeah, I mean, 10 years from now, it's basically, in large organizations, I know it, based on my experience as well, change takes time. So if you want to start changing something in 10 years, probably need to start now. How do you address this from both sides, from banking side as well as from the outside world?
Well, I think exactly as you say, in organisations, particularly big organisations where there's a long lead time to secure funding for change and to kind of build really robust business cases, you do have to start now for things that you anticipate in sort of 8 to 10 years' time. And so that's my advice, is start thinking about it now. And using the data that you've got to identify patterns is a great way to sort of think about not only the problems of tomorrow, but the problems that you might face in 10 years' time. I think the biggest challenge that many of us face in that is actually finding the time to do it. We're all so busy, sometimes dealing with the problems of yesterday, definitely dealing with the problems of today, and possibly the problems of tomorrow, that actually spending time on the problems of, 5-10 years in the future feels like a luxury, but it isn't. It's an imperative. We all know the famous business cases of organisations that didn't think about the future, that didn't kind of get their strategy together to be prepared for the future. And so it's incumbent on all of us to actually make time to think about that, to understand not just the evolving regulatory landscape, but really understand the evolving criminal landscape. Because you can bet your bottom dollar that criminal organisations are investing heavily in that activity themselves, and they don't have the budget constraints that we do. They don't have to go through some kind of complex governance process. They can just get on and do it. So thinking about the ways in which criminal organisations seek to circumvent our controls, and really putting in the time to kind of do some quality thinking, it would be my strongest recommendation.
I mean, these are great points, right? And here in this event today, the good thing is that we have, providers as well as, corporates, so that, basically, bringing the two worlds together. Now, the question is, starting from this conference here, for example, you find an interesting vendor that you want to use. How do you go into the vendor selection process and, from testing through implementation and operations?
At Citi, I've not experienced that because I'm fairly new to the bank. But at other organisations and that I've worked at where I've experienced that, it's a long process, right? There are so many solutions out there, claiming to cut your time to market, cut your FTE requirements, cut your data, or increase your data usage, improve your controls. So I think it's knowing your business case, going back to your foundations, understanding what you need to solve for at the minute foundational level. If you have that documented and you understand your true risk, your true purpose, your scope, and you've got all of your connecting tools ready to implement with a new provider, and you understand what that risk is, I think that's how you start your selection process. From there, come on, we all know it's down to relationship cost and time to deliver, and a lot of that factors in any RFP that you might run with a vendor solution. But I think it's knowing your own use case rather than being told that use case by a provider, because I think we all fall into a trap of being told, hey, we need perpetual KYC tools. These are what we need to go out and buy now. But can your firm actually do that? Do you have the infrastructure now to be able to provide the data, to be able to input into these wonderful tools that I'm not saying are not out there and can provide a solution, but actually your infrastructure and your foundations need to be right to put them in place. Otherwise, you're never going to get them done, and you're always going to be, year on year trying to improve and change.
And before it was mentioned, basically, compliance, basically firefighters, and we need to make sure that, we adhere to the laws and regulations. But how does it look like from a customer perspective? Because just implementing a solution to make sure that a solution is in place, could sacrifice business workflows and eventually customers.
I think customers shouldn't see our dirty laundry, basically. We should have a fascia to our client that actually doesn't show how we might be, pedaling very fast inside the organisation. So for me, a customer should have a seamless experience. They should be able to enter the organisation, be asked for certain information in an effective, complete way, and then become a client of the organisation for whatever product they would like to trade. However, in reality, it isn't always like that, right? So we are often outreaching to clients through different mediums, whether it be Outlook, whether it be portals. You know, there's been a huge drive across the industry to put in a KYC portal into your firm so that clients can, you know, digitise their customer journey. It's working in certain businesses, but not in all. And clients will, especially multi-bank clients, if you take large global corporate organisations, they're a multi-bank. They would have to have access to 10 different portals. And they would often, you know, I've heard it said, say, why am I going to have a log-on for you and a log-on for HSBC and a log-on for Barclays? They are, you know, what stands in the way of sometimes us being a much more digital journey for clients. So I think what we need to be is efficient, have abilities to move the dial, but not air that dirty laundry in front of our clients. But technology internally needs to be effective. It needs to be able to drive processes. So workflow, I think, is one of the most important tools, and having reporting capabilities. I think people forget. They say, oh, we need a workflow, and we implement workflows. However, you know, your data and your reporting on the back of that actually tells you the analytics around how you're behaving, what your scorecard is, what your, you know, performance is for your client. So I think making sure that you have those in play are really what are going to turn the dial for client.
And in particular, how do you see the role? I mean, you mentioned technology before, right? But how do you see the role of technology and also data? I mean, we have also an expert on data here.
No, I think I would like to hear from the user perspective.
Well, I think the data point is absolutely critical. Both the data that we as banks hold internally and how we maximise the use of that, but also the data that we seek from external sources, whether that's publicly available data or data that we're paying for, and bringing all of that together in a way that enables us to keep our records up to date, to identify changes, and to act on changes that may be suspicious, I think plays to the point that Nicola made around the client experience. So for 99.9% of our customers, it should be seamless, it should be easy. But for that small percentage that might be a bad actor, it should be really difficult and uncomfortable. And we need to get much better at spotting those ones and addressing the risk that they present to our organisations. And data, I think, is the way in which we'll do that, combined with the machine learning capabilities that are coming our way. I mean, we're involved in a couple of it feels weird to say this, but really exciting experiments around machine learning and that kind of large language processing with a couple of well-known organisations, let me say. And the possibilities are just fantastic. And I think we really are in a kind of game-changing moment for the space that we operate in. Like Nicola, I've been in this sort of space for about 10 years. And some of the conversations do feel a bit deja vu, you know, the kind of analogy of building the airplane as you fly down the runway. We were saying that back then. That's just how it is. That's the reality. So I think we need to stop complaining about that and just accept that's the currency of the landscape we operate in, and take advantage of the massive technology opportunity that's coming our way to really, really shift what we do in our organisations, both for the benefit of the communities we operate in, the benefit of our customers, and the benefit of our businesses.
Yeah, I would just add on that this is a mutual thing. We're talking about public to private, private to private partnership. A lot of it is like from let's say vendor perspective, technology and data solutions perspective, is we could provide the things in the way that we could think that this would work in the ideal scenario. But when you put into the practical case, it may not. So I believe vendors would love to receive the feedback so that the product or the solutions can be adjusted to then deploy to the more appropriate use case.
I think I agree. I think we should probably spend more time. We do spend a lot of time talking to vendors. However, from bank to bank, the solution is different. You know, our infrastructures are different. Our tools, our current tool stack, you know, is very, very different. Our risk appetite is very, very different. So I think you've got a challenge in trying to please us. You're finding a solution that can be, you know, global across bank to bank is a challenge for all our vendors out there. And we all want to configure, and then that's just the way it is.
So you mentioned already that there's a lot of data, of course, right? And right now, what everyone is doing in an isolated manner, at least in most cases, is collecting data and using it for different use cases. And you just said there's a company like Moody's who have a platform, for instance, where they provide data, even though it needs to be adjusted from company to company. But have your organizations looked into not only data collecting, but also data sharing? So for instance, sharing also reports back to providers, sharing reports, of course, in any event to authorities, but, streamlining this process to make it, unified, to make it simpler, to make it standardized.
Yes, we've all done that. We did that a number of times with different sort of aggregators or KYC utility providers in the past, and we all tried to harmonise and be able to have a single record that we could all draw on, or single data points from vendors to draw down on. I don't think any of us are there yet with sharing our data. There's a number of regulatory and legal restrictions in preventing us from doing so. But yes, in principle, having the ability to source public data and share it within our own organisation is something that we are all striving to do. Unfortunately, there are certain countries where we can't even share our own data. There are certain countries that just prevent us from even sharing the KYC information for the same subsidiary. So we're onboarding, that is customer experience challenges that we face day to day.
Yeah, I mean, I would just agree with what you said there, Nicola. In an ideal world, we would be able to do that, but we haven't managed to No, I don't think we've overcome the challenges.
I went to an event recently, a blockchain event, which was talking about, that exact example of being able to put data onto blockchain, KYC data onto blockchain. The client owns that data, so the principle would be that we weren't sharing it, the customer was sharing it, and the customer was making it available to us. And we've all done that in the utility space in the past, but it didn't take off. So and I think they are marketing at New Economy, and I think that probably is where it fits in the retail organisations or the cryptocurrency organisations, where it's individuals who have it's their own data and they're happy to share it. Whereas in the corporate world, I think that makes it quite a challenge.
I think there's also an element of data is shared. The KYC data is shared to an extent. Look at the corporate registry, the public registry. So those data are shared, but what gets challenging is how you then risk assess it, and then do you share the outcome of the risk assess? That's fairly difficult due to the jurisdiction, the legal requirements, and then each of all these organizations and the product that they offer and the persona of the client makes that data sharing very challenging.
You're absolutely right, and it reminds me of the Companies House reform that's underway at the moment. So they're taking steps to improve their identification and verification of directors, but yet we can't place reliance on that, which is baffling to me. But that just proves that I think the challenge is even with a public institution that is taking those steps, and yet we have to then repeat that.
And you've mentioned basically one point before, which is, perpetual KYC. And now also thinking about, 10 years from now, that we're ready to this discussion. What are the key challenges that you're facing in perpetual KYC, and how do you tackle them?
I'd say there are two, and we are very close to being on the first step of that journey. Perpetual KYC means a lot of things to different people. For us, it really means what we're calling event-based monitoring. So we are monitoring customers in certain categories and undertaking a CDD refresh on a trigger basis. So the perpetual KYC in its sort of purest sense is some time away, I would say, but we are progressing towards that through moving away from a trigger being a calendar event to being an actual change event. The challenges, I would say, are, one, bizarrely, is a kind of an emotional challenge, because nobody ever got told off for doing periodic reviews. That's just the way the industry operates. And so moving away from that, you have to address that attachment to a way of working that has become the industry standard, and recognise that there is a comfort in a periodic review, even if everybody knows that it's not the most efficient or effective way of keeping your CDD information up to date. So I think recognising that emotional challenge and the potential discomfort is important, and one that will need to be addressed across the business, across the three lines of defence model. And going into those conversations with information and evidence, so running experiments, testing things out in parallel to your current ways of working so that you can demonstrate why an event-based monitoring process is going to be better for you. The second challenge is around data. And, you know, any move towards perpetual KYC is dependent on data and all of the challenges that go with that. So if using third-party data sources, you've got to be in a defensible position. You've got to understand how that firm is producing its data, what its operational resilience is, what you would do if it went wrong, how you would spot if it went wrong, because you're going to be building a huge amount of trust based on various third-party data sources. So those would be the two for me.
Yeah, I have to agree, and it's having that capability internally from a technical perspective, you know, joining the dots on all of your internal infrastructure. You've got, you know, your screening tools and your transaction monitoring capabilities, often, you know, managed by different organisations, different technical organisations. So it's bringing everybody together on that same journey in-house, as well as the, you know, the emotional change that you talked about. I think that's something that we've all got to overcome.
I think you highlighted a very good point. So, you know, speaking for experience as well, there's an element of mindset change, you know, on the people side. So I would also emphasize on, let's say, people first and process first. Like you gotta overcome those two before you actually get into like data and technology led, whichever approach that you go into, the whatever form of PKYC that you go into. So I highlighted a point about the data and then technology. So certainly from Moody's, as well as our peers in this industry of solutions provider, we emphasize on data is because the element of KYC is actually built on a foundation of data. So you've got external data that you need to get from your clients. You've got the entity data, corporate registries, ownership, and all of that. And then you have your screening data. So you have to screen against PEP sanctions, and if it's media, still external data. The third data is the individual that sits behind the company. So when you go to a director, UBO, you need to extract the ID and V, proof of address, and things like that. So these are external data. And the last one is to have, depending on your policy, you need evidence to support those data that you need. So these are the, let's say, the vendors or the solutions that will provide you with the ease of access to that. Now, from the adoption or probably implementation perspective, you know, speaking from a Moody's sense, is we come up with something called the 4 pillars to go towards the perpetual KYC. So first one is everyone knows about this, is digital transformation. So come with digitally collecting your data and how you consume your data and store it to create some sort of a digital KYC profile. Second thing is on your existing clients, you have to remediate, uplift to today's standard, make sure that it has got a link to that data source, that it auto-refresh, or in some sense, auto-enrich the data. Then you go into the next phase, which is where the interesting bit, which is the risk trigger. So you then define your data between the material risk versus the non-material risk in the lens of KYC financial crime. For those that, let's say, goes into the immaterial risk, you can promote STP, you can auto-update, and then move your review date forward in a streamlined way. The third one is where the scale. So we refer, like Alia and Nicola mentioned about this, is that you're going to work on something that is feasible. So lower risk client, lower risk product, or easy access jurisdiction that has got lots of data as an evidence. And then finally is the adopt and scales. Like, I've briefly touched on this. If any one of you interested, you can hop onto the Moody's KYC.com and you can actually extract this report that I mentioned. It comes with all the infographic that we share. Again, this is on the feedback of the survey that we did amongst the senior compliance professionals.
Yeah, that's a lot of more controls, a lot of more data, and we have a question that's related from the audience. What role does perpetual KYC have to play in supporting the customer's experience?
Well, I mean, it's at the heart of it, because if we can move to a position where we're updating some of the background information automatically from reliable public sources or from data sources that we pay for, the customer's life is much easier already. So I think it kind of plays into that point of where we can address due diligence requirements through existing customer journeys, reach out to them for what we need in a very targeted way, in a way that makes sense to their interactions with us as a financial services provider, rather than it being driven from a kind of a big to-do list of hundreds of questions. So I think it's absolutely fundamental to improving the customer experience.
I think some of that we have to remember is related to policy as well. So, for example, what we might be able to achieve here in the UK based on the data sources we can gather here may not be able to be done in another jurisdiction, and so our client experience may not be as perfect as we would have liked it, even if we have introduced a perpetual KYC, because in certain jurisdictions we're still physically outreaching because our policy in that region isn't harmonised with the UK requirements and therefore has an uplift. So I think, trying to, as our customer experience for perpetual KYC has the client at the forefront, as you've just said, but we do have to remember that it may not be the silver bullet for everyone, and it's going to take us a while to get there globally. You may only be looking at this in your lower jurisdictions in the first instance.
So I don't know if it applies. This is from vendor perspective. So this is what we observe as well. So for all the relationship managers that they have regular interaction with the clients, they will be looking at their own dashboard, whatever the CRM system is. So I believe one of the fundamental of perpetual KYC is to be able to share that kind of status or information between the compliance team as well as the relationship management team. So when the relationship management pick up the phone and speak to the client and go and visit the clients, they would be able to see what's out, what's to be done, what's pending. So they don't have to go and meet the client and then 2 weeks later and say, oh, actually, by the way, there's a compliance things that you need to fill out. So the client would feel like, why didn't you tell me like 2 weeks ago, that kind of thing. So I think that adds to the element of the client experience that you mentioned there. It's that
360 view of a client at any point of time is one of the things I think we all struggle to achieve, so that, as you say, every time we have a conversation with a client, whether it be an RM in country, whether it be, in a different jurisdiction, we can quickly identify the client and its life cycle events, either due or in progress, whether that be trigger, adverse media, transaction monitoring, or KYC review, or otherwise.
And we have another question from the audience, and we will open the floor for further questions. But otherwise, just please use the app so we have it directly here. Are there any misconceptions you've seen people have with the perpetual KYC?
Simply, it's simple. that it's going to be done. Top of the house. I think what we struggle with, especially, and I'm not talking from a Citi here, I've seen it in other organisations, the COO gets one of the big four knock on their door, or one of the vendors knock on their door and says, have you heard about perpetual KYC? It's going to scrap your whole KYC workforce. You can do everything by data, and you can get onboarding done in this sort of time, and your renewals won't be required anymore, and you're going to have a massive cost save. And their eyes light up, and then they knock on our door, and they say, oh, okay, you know, why haven't you got this? Why aren't we doing this? And so, you know, that to me is the challenge that we face on a day-to-day. It's not simple, and it's not, you know, it's not quick. Time to market on delivering it is not easy. It's long, and you know, getting your house in order and having your foundations are key enablers of delivering a sort of a micro KYC model or a perpetual KYC model.
Yeah, I think the other side of that misconception. So there's on the one side, you're right. There's one view which is, you know, all of your expense of due diligence will go away. It will happen in the background. You'll never have to lift a finger. The other side of the misconception, it comes from the regulatory perspective, which is this is a pure play cost reduction exercise. You're just doing it to save money. The reality is, if you're doing this right, your risk management will improve because you'll have better awareness of changes in your customer population. You will be able to put a lot of the more administrative aspects of CDD updates into an automated fashion and focus your people on where there really is risk. So rather than having to make a choice between do we deal with a significant event such as the volume of Russia sanctions that are coming through, and to do that today, many organisations are having to make difficult calls between where they allocate resource to deal with a pressing issue. We'll have that capability to be able to actually spend our time on where the risk really is, where the challenges really are by automating. So I think I agree, it's not a silver bullet from a cost perspective, and getting the balance in messaging right, say this will make us more effective and more efficient at risk management is critical.
Yeah, one point that I saw in my experience at Allianz was also the involvement of, you know, all of the different stakeholders, you know, business, compliance, technology, risk, whoever is involved. If they're not working together from the very beginning, at least based on my experience, you know, any project is subject to fail. You know, business implements something and compliance, you know, thereafter adds controls why they should be involved at the beginning.
I think the investment up front as well, you know, this is not going to be something that you can't invest in. And it has to come with significant investment, you know, so you are spending before you get return. And I think that's always, you know, why people think that everyone you speak to will say, well, KYC is easy. It's just collecting a bunch of documents and checking it off, you know, and if it was that easy, we wouldn't be here talking about this year on year, right? So I think having the investment now for that 10-year delivery, whether it be you move to trigger events earlier, but, you know, future state being 10 years, that maybe you are in a much more trigger-based renewal or review process, that would be what we need.
Just, you know, looking at the time, we got another question in. With transaction monitoring solutions and programs being accelerated with the use of AI and machine learning, do you see any future advancements in perpetual KYC?
Yeah, definitely. And actually we are, that's not our future, that's our present. So we've got some really interesting technology now in our transaction monitoring space, which we can use to enhance our due diligence processes. So by that kind of dynamic assessment of customer risk based on their transactional activity, interplaying that with our CDD view of risk in terms of the more static measures that we use to calculate risk, we're already there, we're doing it, and it is really, really useful because it allows us, again, to further calibrate how we tackle risk across our customer population, not just based on static CDD information, but combining that with actual information about how our customers are behaving through that dynamic risk assessment. So we're there, and it is really useful.
And I think that makes the job of the KYC analyst more interesting. We start to move towards being, risk assessors rather than, document gatherers and checking off from a list. So I think we will be able to uplift the skills of our individuals who work in our KYC teams and create the risk managers who are able to look at dynamic risk and be more effective for the organisation.
Thank you. Maybe one last question. We just have to be fast and quick.
Okay. Hello? Hello? Dimitri Dorgan, STEM Technologies. I have a question that's on the topic of the 10-year horizon, data and technology. So we heard from Alia that you're working in the space of large language models, AI, all of that next stuff. And we know Square is partnering with OpenAI to use GPT-4, and I'll bet my lunch that there are other companies that are investing in this. Do you think that maybe there is a risk that because of the requirements for these models, in terms of resources and data, that we'll see a consolidation in the established financial services because they will be the only ones that will have the tools to deter our bold and creative fraudsters that don't have any of the regulations that we do? And do you think that's going to impact the end consumer?
That's a big question. So your question is there a consolidation risk in the providers of those kind of AI machine learning technologies? I think there is. But I also think we're in a different world of technology now where there are opportunities for disruptors, for innovators to come in. And to me, the landscape isn't settled. Yes, there are a couple of big organisations who've got the muscle to sort of get things moving, but I don't think we're in that space yet. But you're right to call it out as a risk.
Any last thoughts? Then I would like to, say thank you very much to the panel, but also to the audience. Resilient KYC and AML always, is going to be a big topic also in 10 years from now. And technology will certainly help. So thank you very much. And
Thank you.
Thank you.